Bollinger Bands are like a roadmap for traders. They help us see where a stock's price might go. Imagine a highway with guardrails. The price is the car, and the Bollinger Bands are the guardrails. These bands are displayed directly on a stock chart. They tell us if a stock is trading at a high price or a low price, relatively speaking. This helps us make smarter trading decisions. Bollinger Bands were invented by a famous technical analyst named John Bollinger. They've been a popular tool for traders for decades. Bollinger Bands have three main parts: a middle band and two outer bands. Think of it like a sandwich. The middle band is usually a simple moving average. This just means it's the average price of the stock over a certain period. The most common setting is a 20-day moving average. The upper and lower bands are what make Bollinger Bands special. They are plotted 2 standard deviations away from the middle band. Standard deviation is a fancy way of saying how much a stock's price jumps around. The coolest thing about Bollinger Bands is that they adjust to how wild the market is. When the market gets crazy and prices swing all over the place, the bands widen. It's like the guardrails are moving further apart to give the car more room to swerve. When the market calms down, the bands narrow. This tells us the stock is trading in a tight range. It's like the guardrails are moving closer together because the car is driving more smoothly. Understanding volatility is key to successful trading. Bollinger Bands make it easy to see what's happening. Section 4 Bollinger Bands in action. A trading example. Let's say you're watching a stock called tech company XYZ. You see the price has been moving lower, but it just bounced off the lower Bollinger Band. This could be a buy signal. Why? Because the lower band is like a support level. Buyers might step in and push the price back up. Of course, it's not foolproof, but it's a clue. Now, imagine tech company XYZ's price breaks above the upper Bollinger Band. This could mean the stock is overbought and due for a pullback. Might be time to sell. Section 5. Benefits and limitations. A balanced view. Bollinger Bands are awesome, but they aren't perfect. It's important to understand their strengths and weaknesses. One of the best things about Bollinger Bands is that they can help us spot when a stock is overbought or oversold. Remember, the bands adjust to volatility. When they squeeze tightly together, it often means a big move is coming. But be careful. Bollinger Bands can give false signals. Don't rely on them alone. Use other indicators to confirm your trades. Bottom line, Bollinger Bands are like a secret weapon for traders. They are easy to use and can give you an edge in the market. Just remember to use them wisely.